Good morning. We will do fixed assets today. I want to ensure that you know how to do the calculations for fixed assets and that you read the sentences properly to understand whether they're giving you the opening balance or the closing balance. So if you look at the 28th February 2021, it seems that it is the closing balance, but you can't just assume this is the closing balance. You have to go and read at the information that they give you here. Now, if I look at those dates, it tells me that is things that happened during the year. So it means that my financial year will be from the 1st of March 2020 to the 28th of February 2021. Okay, that's very important to determine whether the balances are given at the end of the year or the beginning of the year. If they tell you it's at the beginning of the year, then these are your opening balances and you will record the rest of the entries and calculate the closing balances. Because they give you here the amounts at the end of the year, it means that you have to work backwards to determine the opening balance. Okay, so I'm going to do T accounts for equipment. I'm going to do first. And accumulated depreciation on equipment. Okay, now remember, equipment is an asset. Assets increase on the debit side and decrease on the credit side. So the balance will be on the debit side. The 1st of March, balance brought down. Okay, now if I increase my asset, I would always do it on the debit side. And if I decrease my asset, I will do it on the credit side. But because IFRS requires that you have to show the cost price of your equipment and accumulated depreciation at the beginning of the year and the cost price and accumulated depreciation at the end of the year, we have to open a second account. So normally I would credit my equipment when I want to reduce it. So therefore, this accumulated depreciation is my negative asset. And I will have a balance on the credit side because I want to say what is the balance on the debit side of equipment less the balance on the credit side of accumulated depreciation to work out what is the carrying amount. And the carrying amount is what is it worth. Okay, so that was at the beginning of the year. Now you must read very carefully. The equipment has a balance of 80,000. The bookkeeper, the equipment was purchased on the 1st of December on credit for 20,000. So we bought more equipment on the 1st of December. No entry was recorded for the purchases or the depreciation for the current year. So because no entries were recorded, the equipment balance and the accumulated depreciation balance is your opening balances. Okay, then we have to calculate the closing balance. So we see that the new equipment was purchased on the 1st of December for 20,000. So on the 1st of December, we increased our equipment with 20,000 and the equipment was, they don't tell us if it's cash or credit, so it could be bank or it could be creditors control. And therefore my closing balance is 100,000 rand. Okay, now I have to calculate the depreciation for the current year. So I first have to calculate on the old equipment that I used the whole year. So I will show from the 1st of March 2020 up to the 28th of February 2021. We used equipment with a cost price of 80,000. Depreciation is calculated on cost, so it's 20%, and that will give me 16,000 rand. Then I have to calculate depreciation on the new equipment that we purchased for the number of months that we used it. We bought it on the 1st of December, therefore we will write off depreciation for December, and we will write it off until the last day of the financial year. This equipment cost 20,000 rand. The depreciation is 20%, and this is December, January, February, so it's only for 3 months, and that will give me 1,000 rand. So the total depreciation for the current year will be 17,000. So I will open a depreciation account, and depreciation is an expense. So I have to debit the expense with 17,000, and I will show the account that will be credited will be accumulated depreciation on equipment. And in the accumulated depreciation account, I will show at the end of the year, the account debited was depreciation with 17,000, and that means my closing balance is 33,000. Okay, I'm going to do the note for the equipment now, and then when we do the vehicles, I'll do that separately again. Okay, so if we look at the equipment account, the opening balance is 80,000, so the cost was 80,000. The accumulated depreciation was 16,000. Now remember, the accumulated depreciation must be in brackets because it decreases the value. So it means if I subtract the two, my carrying amount at the beginning of the year is 64,000. Then if I look at the additions, there was 20,000 that we spent on more equipment. This is a positive figure because it increases my assets. And my depreciation for the year was 17,000, and depreciation decreases my assets, so it must be in brackets. Okay, then I take my cost price at the beginning, 80 plus 20, and that gives me 100,000. And I take the accumulated depreciation at the beginning of the year, the 16 plus the 17, and that gives me 33,000. And if I subtract it, it tells me that my closing balance, carrying amount, what it's worth, is 67,000. Okay, so we are finished with the note for equipment now. Now we're going to do the vehicles. Okay, so I'm going to draw an account for vehicles again, and I'm just going to do it in a different color pen. And the accumulated depreciation on vehicles. Okay, same thing. Vehicles is my positive asset. Accumulated depreciation is my negative asset. These are actually one account that we split up so that we can see what is the cost and what is the accumulated depreciation. Okay, so here I start with a balance at the beginning of the year. I know that we bought extra, and then we will have the closing balance. Accumulated depreciation, I must also start with my balance at the beginning of the year, and then at the end of the year I will write off depreciation and I will get my closing balance. Okay, now what's very important, don't just assume because in equipment they didn't record any entries that it is the same with the vehicles. You must read carefully again. Okay, so the bookkeeper recorded the entry for purchase of a new vehicle on 30 November for 160. Okay, so on the 30th of November, they bought a new vehicle. So it will either be bank or creditors, depending how you paid. And this new vehicle cost 160,000 rand. Okay, now read very carefully. Is that balance there your opening or closing balance? The bookkeeper recorded the entry for the purchase of a new vehicle. So this was already recorded. So it means my closing balance is 400,000 and then my opening balance will be 240,000. Okay, then for the accumulated depreciation, we must also determine whether they've already done it or not, but no entries were recorded for the depreciation for the current year. So that means they didn't do the depreciation for the year, so the accumulated depreciation that's given to us is my opening balance. So this balance here is 86,400. Okay, then I'm going to calculate depreciation on vehicles, and you have to ensure whether it's diminishing balance or whether it's cost price method and what the percentage is. Diminishing balance means that you subtract accumulated depreciation that was already calculated during the year. So for the old vehicle, I will say I used that vehicle from the 1st of March 2020 up to the 28th of February 2021. The cost price of that vehicle was 240,000, but we've already written off depreciation on that vehicle 86,400. So that 86 is not on the new one. So it's just on the old one that we've already written off. So we subtract it from the old one and we calculate 20% on that. And that will give me 30,720. Okay, then on the new vehicle, we bought it on the 30th of November 2020. And we use it up to 28 February 2021. Because we bought it on the last day of November, we will not write off depreciation for November. The new vehicle cost 160,000, so I have to work out on the 160,000, 20%. Not for November, so it's December, January, February, only for 3 months. And that will give me 8,000 rand. So the total depreciation on vehicles for this current year is 38,000. Although you do two calculations, both of them are done on the last day of the year, so you record it as one entry. So I will show that my accumulated depreciation will increase with the 38,720. And then very important, you must remember that we have an accumulated depreciation account on equipment. We've got an accumulated depreciation account on vehicles, but we only have one depreciation account. There's only one expense. Okay, so I will debit this depreciation account with 38,720 and indicate that the account that I will credit will be accumulated depreciation on vehicles. And there I showed the debit account is depreciation, and that gives me a total of $125,000 38, yeah, sorry, 125,120. Okay, so in the first one, equipment, they haven't recorded anything, so that's why we use the balances provided as the opening balance. In the vehicles, they said they recorded the purchase during the year, so therefore the 200 and the 400 that they gave you was the closing balance, and you had to subtract to determine the opening balance as 240. No depreciation was calculated, so the balance given was my opening balance. Okay, then I'm going to record this now in my note again for fixed assets. Oh my word. I can't find my note now. Okay, I'm going to just show you on the Afrikaans one so that you can just see how you fill it in. Okay, sorry, here it is. Okay. There's the cost price of the vehicles. The beginning of the year was 240,000. The accumulated depreciation at the beginning of the year was 86,400. So I must subtract that to work out what is my carrying amount at the beginning of the year, and that is 153,600. Okay, then the depreciation for the year was 38,720. This is going to decrease the value of the asset, so it will be in brackets. And the new asset purchase was 240,000. So I will show the addition as 240,000. Sorry, the addition is 160,000. Okay, that means I take the 240 plus the 160, and I see that my cost price is 400,000. Okay, then I take the accumulated depreciation at the beginning of the year and the accumulated depreciation at the end of the year, and I add it, and that gives me 125,120. If I subtract that, it will give me 274,880. So what you have to do next is you have to add up all the different assets that you have and determine what was the carrying amount total of all your assets. So you will add all of them. If they don't ask you to do the total column and you have to do the balance sheet, it means it's this figure that I need to put on the balance sheet. So I will add those two figures together and say the carrying amount of all my assets is 320,000. So this is the figure that will appear on the balance sheet. So you want to show on your balance sheet what is all your assets worth at the end of the financial year, and that is the carrying amount of all your assets. I hope this lesson helped you to understand better how you have to do the calculations and record the entries. And then also very important, remember to divide your page in 3 so that you have the dates, that you can see how many months you are calculating. You show your calculation and you show what is the amount, so that it's easier for you to see in the end exactly what is the total amount. If you write it all over the page, you don't know eventually what you have to add together. This also makes it much easier for the person that's marking, and this will definitely increase your marks. Good luck.